Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is our good friend, James Anderson from SD Bullion. James, it's great to see you again.
Guys, it's good to be back. Thanks for having me back.
Hey, so James, there's been a little bit of a debate on Twitter lately between SRS Rocco and CPM Group, and they've been debating whose data is more accurate. So Metals Focus is one of these companies that they provide all the data for the Silver Institute, the annual reports, and CPM Group also does a lot of silver-related research. And the big debate lately is whose data is more accurate related to silver investment demand for 2021. And there, CPM Group's even gotten into this. They've been coming out sort of defending themselves, and SRS Rocco's been out there, criticizing them. So here's the gist of it. CPM Group is saying that silver investment for 2021 was 100 million ounces. And Metals Focus 2021 silver investment is claiming it's 280 million ounces. And is this a difference of how they count things, or where do you think this difference is coming from?
I'm not sure of the difference. You'd have to ask CPM Group about how they came up with that figure, but it's a difficult number to come up with because, silver and gold industry is a lot of companies are privately owned. And so to get information that's, very accurate is kind of hard. And sometimes companies will really guard that because they feel like that information is proprietary and they don't want it out in the public. But you can extrapolate if you have an idea and an understanding of market share in the industry and you get enough data, you can extrapolate it out from there. And so just doing it, and we've had a brief conversation yesterday about it on Twitter. Metals Focus is much closer to being accurate in terms of last year's silver investment ran around the world. And you have to remember too about that number, it's almost as large in ounce terms as it was in 2015, which was a massive, huge demand for silver that year because of the spot price falling to such a low level. You had so many people who are heavy silver stackers who were buying those dips, dollar cost averaging lower as the spot price was going down. And so that level is almost met in terms of ounces. And obviously people paid higher in spot prices last year than they did in 2015. So, the demand is very strong. And so CPM Group is not even close because, we can talk about the data, but it's not even close.
So I actually, a lot of these CEOs for the different bullion dealers in the United States, I know them, and I can send a text and ask them. Right. So I sent a text to Andy Scheckman at Miles Franklin, and he flat out told me that Miles Franklin, who's only one of many bullion dealers in the United States, he told me he did approximately 25 million ounces, wow. not dollars, ounces, wow, of silver sales last year in 2021. So if Miles Franklin, and so there's a bunch of companies, and Miles Franklin is not even the biggest. Most people generally believe that APMEX is the biggest out there. And JM Bullion, SD Bullion are also up there in sort of that top 3 or 4. And Miles Franklin's probably up there too in those top 3 or 4 categories. So if Miles Franklin is admitting to 25 million ounces, and most people generally believe JM Bullion and APMEX are at least the same size or bigger than Miles Franklin, and then SD Bullion, who you work for, is probably in that same neighborhood. Those 4 companies by themselves, right, in the United States do 100 million ounces. Right. I sent a text message to Silver Gold Bull CEO, Bobby Belandis, and he told me his numbers, which were in the same neighborhood also. Right. So just North America by itself with those 5 companies that I can get information from is more than 100 million ounces.
Right. So you're not taking into account all the other tinier online retail dealers.
Oh yeah.
Yeah, local coin shops.
Thousands of local coin shops, brick and mortar, not just throughout North America, but Europe's demand in silver has been a lot stronger of late too.
And then there's India and China and the Middle East have a huge gold and silver savings culture, right?
Right. Well, I mean, it's been a little bit sporadic over the last few years with India, especially. they've not been really existent in the silver demand market as much as they were in the 2010s. And so that's even more bullish in terms of when they do return finally, and gold gets unaffordian for them. You know, the common man on the street is going to start buying a little more silver. The farmers use that as a savings account all the time. So, you know, I don't know where they're going to come up with all this silver that's going to be coming, because I don't see the silver investment demand coming down much in the next few years, given, you know, the Fed pivot is probably likely coming this fall, later on this year. And so when that happens, I would expect the demand will get, you know, will keep pressing on, because look, we are in a situation where the Federal Reserve has backed itself into a corner, and the only way out that's historically the typical way out is to devalue the currency. We're already under that situation now, and it could get worse.
Yeah. So are we, you know, I don't know if CPM Group is just the only thing I could think of to justify the 100 million ounce number that they're putting out there is that they're counting coins only, mints, US mints, Canadian mint, Austria mint. And whereas Metals Focus might be doing rounds and bars also.
Right.
I mean, that's the only thing I can think of that would justify the difference in these numbers. Would that make sense to you?
That's a possibility. And that might be one way the CPM Group could rationalize that number. But other than that, it'd be very hard. I mean, it would be reputation ruining if they actually tried to do it with a straight face and say that that was actual bar, round, and coin demand for the year. I mean, that would be laughable.
Yeah. And that's probably worth asking. I'll see if I can get an answer out of them about that. I mean, Jeffrey Christian will return my email, so I will.
But just think about it. I mean, you're talking about 30% of the new line mine supply of the year, the new line and recycled silver for the year, roughly, going into just investment demand. That's a huge amount.
Well, here, let's do the math. Now, global mine supply right
now.
About
a billion now.
Well, no, that's with recycling and everything.
Yeah.
Right. But global mine supply coming out of the mines, here I'll even be generous. It might be 830 million ounces. And if let's just accept Metals Focus number of 280. Hold on, I did this wrong. So 280 divided by 830. So, you know, 1/3, 34% roughly of silver demand for what's coming out of the mines.
It's for store value purposes.
It's for storage. It's just disappearing in private vaults forever, right?
Yeah.
Or for a decade or more.
This isn't even ETFs, right? This is just the physical side of the industry. So
yeah, just the physical side of the industry. Or I don't know, maybe Metals Focus is counting ETFs also. I don't know.
I don't believe so. I think they have an ATP subsection in their data.
Well, I'm going to reach out. I got the name of their lead analyst at Metals Focus, so I'm trying to get him scheduled for an interview so we can actually dive into the numbers and explain this.
Be interesting.
Something else I wanted to bring up with you that you actually tweeted is the U.S. Mint just put this out. Walk us through what they've announced with their gold, eagles, and buffalo coins on allocation.
So first thing is that the U.S. Mint has been pretty poor. I mean, real bad. Like an example of inefficiency when it comes to the Silver Eagle supply versus demand. They changed the law in 2010 with the Dodd-Frank Act. Originally, the 1986 law was for the U.S. Mint to meet, to make enough Silver Eagles and Gold Eagles to sufficiently meet public demand. So they changed it in 2010 with the Dodd-Frank Act and said the U.S. Treasury can deem what is sufficient. So that means that Janet Yellen, or before her, Steve Mnuchin, could say, oh, it's enough Silver Eagles, who cares? And so basically it just allows them to be inefficient. The one thing is they do need to sell enough of these things because it's the only thing that the U.S. Mint does that's really profitable in terms of, really it's the stacker community that supports the Cupro nickels, that cost so much to create. Like for instance, the zinc penny that we use in our pockets, that's almost a cent of melt value now in zinc terms. That's ridiculous. I mean, they had to change the penny in 1982 because copper was getting so expensive, right? And so now we're getting to the point where zinc now is getting so expensive.
Did you see that thing in London where there's now a zinc squeeze?
Yeah, get ready for that. All of a sudden, your zinc pennies are going to start disappearing if they're 2 cents.
Yeah, I mean, there was earlier this year. There was the nickel, the actual metal for nickel.
Yeah.
Supplies. There was the crazy thing going on in China. Someone, some supplier of nickel got hugely short, and there was a huge nickel squeeze. I think nickel went up to like from 20,000 to 100,000 per ton, or however, whatever it is they measure for that contract. But zinc at the same, it's happening in all the base metals, but zinc is now under the same pressure.
Yeah, it's happening. There's potential for a short squeeze to zinc now. And Bloomberg admitted that yesterday, coming out of London. So the point being is that, you know, we've subsidized bullion stackers over the since 1986 really, has subsidized the losses of creating these copper nickel coins, you know, in the premiums that we pay for our coins. And so the US Mint is lucky to have stacker community continue to buy their products. And they've just been inefficient in the silver department, but they've been doing pretty well in the gold department. Like last year, the amount of ounces that they sold in gold eagles and gold buffaloes was record in terms of ounce, not in terms of ounce. I think it might have been the record in terms of dollar value. In terms of ounces, it may not have been the highest. I think ounces, it might have been the late 90s, just because of the Y2K scare and people, smart bullion investors getting in when it was super cheap at the turn of the millennium. But the amount of gold that they've been selling has been super big, and they've been going on a pace to again break last year's record in terms of dollar amounts of gold eagles and gold buffaloes sold. But this news that we just heard from the distributors of the U.S. Mint, it's only so many of them. It's a tiny cozy club of distributors for the U.S. Gold Eagle coins and buffalo coins. Basically, they got told by the U.S. Mint their allocation for the remainder of 2022, and it's not quantity sufficient, they think, to meet the coming demand they expect in the fall. And so my suggestion to people is, you know, expect that premiums are going to not only go up in the gold eagles with gold buffaloes, but that tends to bleed into other gold products eventually as well. I mean, it's similar to the U.S. silver bullion industry, and when silver eagles are not existent or the premiums go through the roof, a lot of other products start getting, you know, higher premiums as well. And so I'm not saying it's going to go silver size premium explosion, but it will be higher, I think, in the fall. And if things go really wrong in the fall, it could get really, really high. So just keep an eye on that. You will see less. The premiums for eagles and buffaloes are going to go high this fall.
Well, you know, that leads into the question we like to ask when we have you on is, of all of the sovereign mint coins for silver, which ones have the most reasonable premium right now? I mean, are the eagles still crazy and the maple leafs still crazy?
Still crazy. I mean, on retail level, you're talking 30 and above, 35, sometimes high 30s if you're buying onesie twosies, and depending on who you're getting them from. But you know, they're becoming almost collectible in terms of price. It's ridiculous. I would suggest that people are looking at different mints will come out at different times, and they'll have huge distribution pushes that they'll make, and they'll cut the premium that they're charging for them down to try and move a lot of volume. Right. So you have to be looking at, say, Canadian maples, which I think may pass the Silver Eagle in terms of ounces sold this year. That'll be the first time ever. And, you know, you got to hand it to the Royal Canadian Mint. They've been much more efficient in terms of a bullion mint than the U.S. Mint has been in the last decade. They were faster to respond to counterfeit threats. They've been better at just everything about their coins has been pretty much better in terms of quality. So I would look at the Canadian silver maple leaf. I'd look Austrian Philharmonic silver, which is the official, you know, Euro lingual tender silver coin in Europe. I'd look at South African Krugerrand silver coins. You look at the Perth Mint, even some of their silver coins are really nice. The quality of those things. So you know, and obviously, I mean, if you don't want to pay a premium, just go with the rounds or the bars. I mean, those are also good ideas in terms of trying to keep your dollar cost average price lower than possible, you know, than you would if you get coins.
Good word. I do want to buy more because it seems like ridiculous cheap
right summer now. Sales on. I put a chart out yesterday. I mean, silver looks like it could go 20 or even below coming up soon. So
oh man,
and people are not paying.
It hurts to watch it go down, but at the same time, it's like I gotta dig up enough money to buy another monster box or something. Just so I say I did.
This won't last. I mean, you got to figure the Fiat Fed's going to pivot at some point. I would assume in the fall, maybe, or toward the end of the year.
Oh, we're going to have our day where it goes to 50 or 100. Yeah. I have no doubt.
I have
no doubt about it.
And then you're going to be. It's like how people brag now how they bought some silver at 8 or something. It's like when silver is at 100 or something, we're gonna, oh yeah, I bought that monster box back when silver was 21. Yeah.
Oh, that's hilarious.
Or I paid $24 when it was 21, and it's I won't, you know. I believe it's going to happen. I just
Me too.
eventually one of these days we're going to get there. But
Yeah,
anyways,
I think people who've never lived through a silver rally don't understand how fast. I mean, as fast as it goes down sometimes, is how crazy it can go on the upside. And it goes on the upside on like a steady climb for long stretches. And all of a sudden, every day you're just turning it on, it's up 1, 2, 3%. And it's just every day, just consistently, boom, boom.
well,
boom.
what do you think is the trigger for that? I mean, right now the Fed is raising rates. They're supposedly doing quantitative tightening in June, but if people who watch the balance sheet's gone up by 10, $15 billion this month, whereas it was supposed to decline by 47.5 billion.
Yeah.
And so there's one more week to go in June. So they'd have to shrink the balance sheet by 60 some odd $billion next week to meet that target that they publicly announced back in April and May.
Yeah, so there's a couple things. That's the balance sheet that they published. Lord knows they probably have a second set of books, and they're probably using special purpose vehicles offshore to hide whatever spinning plates they have in the air. I don't think that's all that they've been financing to keep the system going. So I wouldn't just take the Fiat Federal Reserve at their word for it for their data. Just judging by how they treat us, I would suggest they probably have two sets of books. The other thing I would suggest is what's going to really change it is they're going to pivot, and you're going to get big money to start coming in, because once they pivot and it's obvious that the inflation is not something that they can fight, that they have to just finance the U.S. Treasury by monetizing everything, then it's going to be, okay, well, where does this go? Well, it ultimately goes to a place where the currency devalues like crazy over time. And so you gotta have a position or an allocation to something that's of substance, and you're going to see a lot more big money, I believe, running into gold. And the ones that are looking for a beta bet, the ones that are looking for a little leverage, are probably moving to silver too. And so you're going to get inflows into every form of every type of derivative. You're going to get flows into bullion physically, into ETFs. You're going to get fund flows into miners. All that's going to start happening. There's a cascade of capital sitting out there in those bubbles that will start to flow in. I would suggest that it will happen within the next year or two. I'd be very surprised if you get me on here 2 years from now, we're at these spot price levels. I would understand people in the comments telling me I'm an idiot, but I have sincere faith that the Fiat Federal Reserve is doing what they're doing. It's a bluff, and they are devaluing the currency. That's why they blew bubbles. Bernanke talked about it, creating a wealth effect. They blew bubbles in everything. The housing market, they blew a nominal bubble in the stock market. If they want to keep that wealth effect, people thinking that they're really wealthy, but in real value terms, they're gonna lose a lot in inflation, stagflationary 2020.
Yeah, they're talking about shrinking. Just Powell was in front of the Senate the other day, and he was talking about shrinking the balance sheet by $2.5 trillion. At the same time, the U.S. government's running over a $1 or $2 trillion deficit, so the U.S. Treasury has to sell fresh debt and roll over maturing debt each year. And whereas before, the Fed was the biggest buyer in the market of all this Treasury debt that was coming to market. So now you've got the Fed selling treasuries and mortgage-backed securities. You've got the U.S. Treasury doing it. We're headed into a recession, so odds are the deficit's going to skyrocket as tax receipts go down. So the U.S. Treasury is going to be selling even more probably than what people are officially expecting right now.
Yeah,
we're probably going to see the U.S. Congress come up with more stimmies or more unemployment, benefits or more food assistance. Probably you're seeing it all over the planet where different governments are giving $500 or $750 for energy assistance or food assistance. It's just a matter of time before that happens here, probably before the elections. Would not surprise me if we have stimmies or food assistance coming out of Congress before
November.
November.
The federal tax receipts, a lot of that is, has been at record nominal highs lately in the last few years because of the stock market bubble. People taking profits, paying capital gains taxes. What happens when the stock market people aren't taking profits as much as they once were,
and they have write-offs.
Yeah, you have just tons of write-offs for the losses. So you're going to have a situation where the balance is the amount of federal debt is going to go higher than you ever thought before.
But that'll be the interesting part, if whether the Fed thinks they can actually reduce their balance sheet at the same time. And it makes you ask, who's the buyer? if the Fed's selling down their balance sheet and the Treasury has to finance, not only the rollover of the debt plus another 1 or 2 trillion or 3 trillion in new budget deficits they've got, who's the fucking buyer?
Probably one of their offshore SPVs that you don't know about.
No, because it's not Japan. Japan's not buying. They're selling probably to support the yen right now that's falling apart.
Yeah.
China's probably not going to be a huge buyer of anything because they're more interested. Hey, we're taking Taiwan. We don't need more exposure to treasuries that the U.S. government can then freeze like they did to Russia.
I would think that Japan maybe, I mean, there is a lot of savings in Japan and things have been going crazy there. Like they've probably been buying a lot of debt.
I don't know, wouldn't you think they'd be more likely to sell their treasury to support the Japanese currency at this point, which is falling?
No, I think the way that Japan mainly works is there's a huge savings, a lot of citizens who have a lot of savings, but they can't get any yield on the yen, and the yen is inflating.
All right.
So they're searching offshore. So you're getting.
So that's why the yen's declining, the dollars, because they're moving a lot out of the yen over to the U.S. dollar for more yield. That makes sense. Helping. I'm thinking the Japanese central bank may try to fight that trend.
No, I think the yen is going to go a lot worse.
a lot lower. They've reached the limits of MMT, right? The magic money theory. They have reached the limits of it, and the market is calling bullshit on their bluff right now for yield control, right?
Yeah. If you look at their gold chart, it's just like you look at the 1980 to where it went, and now it's broken out. It's just going up a wall. I mean, Japanese yen to gold is at all-time highs, and looks like it's breaking. It would be like the U.S. dollar to gold going to 2,500 to 3,000 right now. That sort of breakout of the big cup and handle. It's got the same look as the cup and handle that people project in gold. And they show those silly charts with $600 projection. That's basically what it looks like.
Yeah, the yen is dying right now as we watch. And the euro is not that far behind, right?
Every fiat currency in the world. I mean, is
at record highs for gold except for the dollar. Yeah.
Maybe, and even the ruble has bad inflation. So you really can't make an argument that any fiat currency has been doing too great, especially since 2020 rolled around and all the. They basically the central banks agreed in 2019 to go for a secular inflationary regime with the go direct policy in August 2019. I mean, that's the tell. You just go read what they wrote, and then you look at what the growth in the currency supply has done since. I think in some of the larger charts I've looked at, it's gone up about 28%, but in the U.S. Since the August 2019, it's gone up almost 50%. The M2, the M2 supply is a massive. It's like one of the biggest aggregates to judge how much currency is out there, and they've almost doubled it in that time frame. I mean, they've almost gone up 50% in that time frame, which is going to have ramifications that people don't really fully realize yet. I mean, we're only beginning.
Yep. Hey, well, James, thanks for joining us. We love having you on. You're awesome, and we're definitely doing it again in a few months.
All right, guys. Thanks for having me on. Cheers to all you Wall Street Silver watchers out there.